Hey everyone, Coach Investor back to another video for today. So in today's video, we're going to talk about 5 dividend stocks you might want to pick up right now. Some of them might also be growth stocks, but most dividend stocks aren't usually growth stocks. And if they are, they pay very little. So without further ado, let's dive into this. So number 1 is one of Warren Buffett's favorite stocks of all times, which is Coca-Cola, you know, the beverage company. I love it. I have recently, in the last couple of months, I've switched from the regular one to the Coke Zero because, too much sugar might not be the best thing for you. But anyways, the company, this is on stockcard.io, by the way. The company is a fair growth potential, strong operation right now, calm investor sentiment. I don't really think it will ever go into the green section right here. You will see why. Underperformed the market. That's in the last 3 months. It's actually up close to 4%, so quite nice. In the last month, yes, it's a bit down, but then if you go 1 year, it's still up. 5 years, it's up 40%. So you see where we'll go with this stock. It's a fairly priced stock. And then as for the analyst consensus, 12 buy, 7 hold. Right now, the price of the stock sits at $63. The average analyst price target is at $69. Very nice. Anyways, with Coca-Cola, you can see here free cash flow in the last 12 months, trailing 12 months that is, $10 billion, so quite nice. PE ratio is higher than I would have expected, to be honest, 26.5 for a company that really isn't growing that much, right? Year over year, it's not growing that much, but it is paying quite a nice dividend yield, 2.73%. So that's why this is the first company I want to talk about. It's one that you can keep on accumulating, and if you have enough and you can choose between getting cash or more shares, I would highly suggest to choose the option of getting more shares because then, compound interest, it's just a better choice. Next up, we have Appv. Now with Appv, funny story, it was actually one of the first stocks I ever bought in my portfolio back when I started, Appv and Pfizer, back in the day, 2016, 2017. To be honest, I highly regret selling Appv because 1, it is growing, as you will see in just a bit, and 2, it pays a very, very nice dividend. Now, by the way, again, we're doing all of this on stockcard.io. If you want to follow our channel's portfolio, it's free to follow, link down in the description below. We're also having a contest. If you haven't entered that, it's also free to enter. And if you win it by the end of the year, you'll get some prizes, $250 in cash for the first spot. Then the top 5 will get free access for 3 months on this platform, the VIP side of the platform. It's free to enter, so why not? It's a nice little competition that we're having with this channel and the FinTwit community, so why not? All the links down in the description below. So with Appv, high growth potential, stable operations, and now here we see overexcited investors. We're gonna see why. It has outperformed the market, that's already one hint. It's overvalued right now. And the analyst consensus, 11 buy, 7 hold, and 0 sell. As you can see here on the graph, in the last 3 months, the stock is down 5%. But if you look at 1 year, the stock is up 32%. Very few stocks you will see up 32%, unless it's energy, or in this case, Appv, maybe even Pfizer or Johnson & Johnson, etc., Moderna, and that side of the industry. 5 years, 110%, so quite nice. Today's price sits at $152. The average analyst price target is at $162. Now, if we go a bit lower and look at free cash flow, $22 billion, 12 months, which is very, very nice. PE ratio, 21%. It's quite high here. But as you can see, the dividend yield, which is quarterly, 3.56%. Now that's what I'm talking about. That's a nice dividend yield here. Again, it's a company that has grown a lot in the last year, 2 years or so. So let's expect the same amount of growth. Now, specifically with Appv, it actually owns the 2 best-selling drugs in the world, in Humira and Imbruvica, if I pronounce that correctly. But there you have it. That's what you get when you buy this type of company. Nice dividend, and then 2 of the best selling drugs in the world. So there you have it. That's number 2. And for number 3, a more familiar face here with Starbucks, frappuccinos, mocha lattes, Irish something, something, pumpkin, Halloween, you name it, they have it all, right? So here, fair growth potential, strong operation, calm investor sentiment. It has underperformed the market, also with the COVID lockdown, so a lot of stores have closed down, so sales decreased, etc. Fairly priced stock, and then the analyst consensus, most of them 17 hold, 11 buy, and 0 sell. Now looking at the graph in the last 3 months, it's down 9.5%. 1 year, it's down 30%, and the last 5 years, it's up 33 point, almost 39%. Now as for the average analyst price target, it sits at 92, close to $92.5. Right now, $78 per share, so a little upside right there, pretty nice. As for free cash flow, $3.6 billion, PE ratio of just under 21. Dividend yield here also quarterly 2.46%. So quite nice here if they manage, because Howard Schultz, the OG big CEO, famous for this book and the performance of the company, is back. So if they manage to turn it around, and now with everything reopening, etc., then you get dividend and a bit of growth in sales as well. But again, growth in sales remains to be seen. And now before we go into the last two, if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couch investor and also check out all the other links down there. Some of them might be extremely useful for you, and some of them might actually save you some money, so why not? All right, and number 4 here is Qualcomm, a company I'm yet to cover on this channel, but I have been researching this company for a while now, so maybe a video will be coming up. So it has high growth potential. If you don't know what Qualcomm is, actually, it's in the semiconductor industry, very famous for handsets, so your cell phone, 5Gs, Internet of Things. It also had a lot of patents, which it makes money from that as well. The only big risk here, I would say, is their high concentration in China, which is also why you might see some, analysts, the decrease of their price targets and their expectations because of the China and the COVID lockdowns. But continuing here on their stock chart, so strong operations, calm investor sentiment, underperformed the market, it's a fairly priced stock, and then analyst consensus, 16 buy, 10 hold, and 0 sell. Today's price is at $125. The average is $195. That might change pretty soon actually, but still quite a nice upside. If you look at the last 3 months, it's down 20%. Over the last year, it's down 9.3%. Over the last 5 years, it's up 126%. So quite nice there. Free cash flow, trailing 12 months, $7.1 billion. PE ratio, very good, 12.82. And then dividend yield, 2.23%, also quarterly payout. So Qualcomm, an exceptional company. Again, there is this risk of China. There's also this, since it's handset, so with the phone market, etc., you're pretty cornered in that way, let's say. But again, it's much more than that. I'll explain it in a broader video. But Qualcomm definitely at these prices, very lucrative dividend and growth. And then the last one is another player in the semiconductor industry, one that I have been covering for a while, and the only semiconductor in my portfolio today. As you know, most of my videos, we talk about Nvidia, AMD, Intel. Said it from the start. I used to own AMD and Nvidia a few years back, sold it last year because I thought, it has gone up enough. Again, mistake, let your winners run. Since then, I've switched to Intel. Safe to say it wasn't such a great plan. It's down 1 year ago 31%, but again, you get your dividend payouts. Last 3 months, down 23%. But it has high growth potential. Yes, it has high growth potential. Strong operations, pessimistic investors, that's very normal. It has underperformed the market, obviously, and it is an undervalued stock, which is something we haven't seen so far that much. And then for the analyst consensus, most of them have a hold because we do want to see how that turnaround actually, when it will happen, how it will happen. Because, they promised us a lot of things, right? New chips now going into GPUs, building foundries. We know that the Ohio one might actually be delayed because of the CHIPS Act. They want to build one in Europe as well. So that's why you see here 21 hold, 6 buy, and 4 sell. Right now, the price, as we've seen, $38.61. The average sits at $50. Now again, next quarter, if it's another bad one with a bad outlook, or maybe it's the same outlook, that price target might decrease or increase. But over the last 5 years, the stock has barely moved anything, right? But again, Pat came in, I believe, last year already. No, at the beginning of last year. Yeah, I think so. So it will take some time for the turnaround to happen with the chip shortage, etc. Expect it to be, well, time consuming and, well, capex to increase. Now, free cash flow, $9.5 billion, PE ratio extremely low, but that's normal because, well, they're barely growing and they are planning on spending a lot. Once we see that changing, once we see that there is some growth happening, the market will probably award them a higher multiple. Now, dividend yield, very nice here, 3.69%, also quarterly payouts. And again, with Intel, if it does work out, then you'll get and dividend yield, dividend payouts, and growth as well, especially now that is very undervalued, especially if it works out. Obviously, there are many other dividend stocks out there, dividend paying companies, some of the bigger ones, Microsoft, Apple. But obviously, the dividend yield is much smaller there, but you have that growth. Now, if you own any dividend stocks, do let me know down in the comments below which one. If you own any of those 5, do let me know as well. I just picked those 5 because I think at current prices, current growth rates, and dividend yields, those are extremely interesting. Obviously, again, there are many others in that market as well. So do share those down in the comments below. And if you enjoy this type of videos, you want to see more, let me know. Hit that thumbs up button, maybe hit that subscribe button if you haven't. And I'll see you all in the next video. Bye bye.